Google is expected to report nearly 25% earnings growth in the fourth quarter, but that won't necessarily translate into big returns for the stock. For more, I'm joined by Scott Kessler, analyst at Standard & Poor's. Scott, what does Google have to prove in this particular earnings report? What are you going to be looking for?
It's never just about the results. Given that they don't report, they don't provide guidance, really this is also going to be a lot about what the company is talking about for future activities, like the proposed acquisition of Motorola Mobility, like what they're thinking in terms of mobile and other initiatives that they're highlighting as key.
Is that what Google needs to do to really get its mojo back? The stock is still down about 6% from its peak this year.
Yeah. The short answer to your question is we're not entirely sure what is going to enable Google to, recapture not just recent highs, but all-time highs. There are a lot of stocks that have easily eclipsed all-time highs that might have been achieved over the last couple of years. Google hit around $750 a share around Halloween 2007, and the stock really hasn't been that close ever since. We think that the company has done quite a bit of good things in terms of getting that growth story back on track. Now the big question is, why are they looking to buy Motorola Mobility? How is that acquisition, if it's consummated, going to affect the business model and the operations going forward? We have said a number of times over the last couple of quarters that we have questions and concerns about this deal. So we'll see how the company comments about its plans when they report.
Where do you weigh in on the big face-off between Google and Facebook? Can Google really compete against Facebook and other social media sites, even with Google+?
Well, we think Google Plus is, it's a strong competitor for a variety of different reasons, but we really think that Google missed out on an opportunity last summer. They introduced Google Plus. There was a tremendous amount of buzz and excitement. The stock was rising. A lot of people were, frankly, very, very excited about the prospect of getting onto and using Google Plus. And then what happened is the company waited, I think, too long from the time they launched. I think it was probably around late June until they opened it up to everyone. It was a number of months that went by, and we thought they kind of lost out on some of the potential momentum associated with what they had built in the previous couple of months. Now it seems like, look, they're doing a good job in terms of building out the platform, but it honestly seems to us like they've alienated some kind of core search users by incorporating a lot of information from Google Plus within standard search results. And so that never is a good thing, especially since search, notwithstanding all the things that Google has done over the last many years, search is really still what drives the businesses, the financials, and the stock. And if there's any kind of concern about that, we don't think it necessarily bodes well going forward.
And you raised the point earlier that Google never has gone back to its all-time high. So if you're an investor, are you going to be less inclined to hold shares of Google when there's so many other internet options out there, given the IPOs last year and the ones still to come?
Well, I don't necessarily know about that. I think people that buy and own shares of Google do so largely because this is a large, very successful company with dominant positions in very important areas across internet technology. The stock is hardly what we would characterize as expensive, and frankly, there's a lot of staying power underlying the businesses that Google has either developed or bought over the last couple of years. Frankly, if you look at a lot of the IPOs completed, say, in 2011, frankly, a lot of those companies are far less certain. The stocks have performed far worse. And, the bottom line is it's a different kind of investment with a lot more risk. We think Google is a solid company, a solid stock. We look at it as fully valued, but we think a lot of people don't understand and appreciate all the risks associated with investing in a company like Google at this point.
S&P Scott Kessler, thanks for your time, Scott.
Thank you very much.
I'm Rhonda Schaffler. This is Reuters.